Welcome to Streetwise Education Channel. Today we're looking at the coronavirus versus the 4 historical market crash. Now, don't forget to read the legal disclaimer. This is educational purpose only. It's not recommendation to buy, sell, or otherwise. So make sure you read it. Okay? Cool. So let's get started. Now, there are couple key points I want to point out with the coronavirus. First thing first is that the Dow Jones Index actually dropped about 35% since the 10th of February till the 19th of March. Now, it's caused by the coronavirus and also the crude oil war. Now, this analysis actually comparing the current crisis with other historical markets, stock markets, and economic crises. Now, this is the timeline I put together to compare the different crises. The first one is the Great Depression. Before the market peak was in August 1929, and the market bottom in July 1923. The Black Monday was in August 1987, and it bottomed out in November 1987. The dot-com recession peaked at December 1999, and in September 2002, it bottomed out. Now, the subprime mortgage recession peaked in October 2007, and it bottomed out in February 2009. Now, the coronavirus crisis peak was in February 2020. The big question is when it's going to be bottom out. It could take 2 years, it could take longer or shorter term, we don't know yet. And that's what we're going to keep an eye on. Now, I'm looking at the crash and looking at the high and the low market decline based on the percentages. So if you can see in the 1929, the market actually dropped from high to low, negative 88.7%. And in 87, it's only 31%. And in 2000, the dot-com bust was 34. And in the subprime one was 49.3%. And currently, it's sitting at 35. It fluctuates, so between 35 to 27 market drop. Now, we're looking at the high and low decline per month. For the 1929, it dropped 36 months. For the 87, it's only 3. And the dot-com bust was 43, and the subprime is only 16. And currently, with the corona crash, it's only 1 month. So it could be longer, shorter, we don't know yet. Now, the 12 months preceding to the crash. So this is what happened. The 1929, the market actually ran up 158.3%. For 87 was 40%, and 2000 was 25.2%. And in 2008, it went up to 33.4%. For the corona crash, it actually went up to 13.6% before the crash. Now, the recovery by the month. Well, the Great Depression took 302 months to recover. In 87, it took 21. Both the dot-com and the subprime took 47 months. We don't know how long this will take. It could be the next Great Depression, so we're going to keep an eye on this and we will keep you updated. Now, the impact on the economy. Well, Great Depression, the GDP dropped negative 26.7%. The dot-com bust was negative 0.3%, and the subprime mortgage was minus 5.1% GDP. Now, this is a big question. Is the coronavirus a crash or a recession? First thing first, we need to define a recession. We need to have 2 consecutive sectors of negative GDP. Now, at the moment, we don't have it yet. Okay, so we're going to keep an eye on it, but we will be definitely sure by June 2020. Now, I know it's a bit scary and negative, but hey, that's a good thing for you guys. We got some freebies for all our viewers. You get 2 free months of premium courses if you sign up using the link below. So go to theskillshares.com and click on it. You get free courses. May as well learn something new. Now, don't forget to share, like, and subscribe.